All right, you're looking at a daily chart of the NASDAQ. I have a question. Are you getting frustrated yet? Because that's what this market is doing to a lot of traders and investors. But it's actually kind of a normal market. I know from 2020, when they had the COVID and they had the rates at zero, the interest rates at zero, and the Fed was pumping trillions into the system, and the government was spending, trillions of dollars. It was like a three-way prong, just a fire hose of money into the market. And it gave like an illusion like it was easy in the stock market. And now we have interest rates that are raising, 5%, which is fine. We have a decent economy, but we have the Fed quantitative tightening now instead of quantitative easing. Of course, with higher rates and the Fed tightening, it makes a little tougher market, but we still have the government spending. That hasn't stopped. But anyway, I'm just going to say this is like a normal market, and it's normal in September. Let me go to the monthly here. To have a down month, we're down 4%. I believe last week I said the 5-year average is 4.21%. So, we're getting there. And even if it overshoots a little bit, 4.5%, 5%. This was expected in August and September. This pullback here. The thing about today here, I'm going to get a little technical here, is it undercut this August 29th follow-through day. The low there was 13,677, and today it closed at 13,469, right at the lows of the session. So this inverted hammer candle looks similar to these inverted hammer candles here that we had on the downside. I'm not saying we're going to get three soldiers like that, but this is typically indication of lower prices. This is your Friday options expiration day, where it closed near the low of the session. Monday just peaked above. It was like a 1 point, and then yesterday was down, and today we had I'm not going to blame the Fed. The market just wanted to sell off. I'm not going to. I just follow price, and I don't really care about what the Fed says. It could also reverse and go higher, but right now we're in the weakest week of the weakest month of the calendar year. So you got to expect a little bit of selling, because I believe in seasonality, and it happens for a reason. We don't need to know the reason, but it happens for a reason. So anyway, that's enough of that. The NASDAQ fell 209 points, 1.53%, closed at 13,469, which is getting close to this 13,161 here. So the 2 points that I had here was the low of the follow-through day, and then this the low of the pink rally day, 13,161. So it's already accomplished one of those feats, and it's not that far away. 469 to 161, you're looking at 300 points, and it was down 209 today. You could do that in a session. So just going to keep my eyes on that. I'm going to give you a couple of things that I look for in short selling later on, but I'm going to take a look at the Divine 9 or the Grade 8 or whatever. And like I said, we still have the good, the bad, and the ugly, even though today was a sell-off. And oftentimes the first reaction to this noise is not the the real reaction. So I'd still expect a relief rally here. Maybe not today, but the market is getting really oversold, and it might have to wait till next week. But at some point, this thing's gonna stop going down, and it's not going to be September forever. Anyway, Google, anything above the 50 is doing well in this tape. Meta is another one of the good stocks, even though this thing closed right just a tick below its 50. And Amazon is another one that closed right at the 50 today. And man, these things had been really, really strong, and now it closed a tick below it too. So anyway, the bad is Apple. Apple does not look good. Lots of distribution here, well below its 50, and it's just consolidating in this base. Hopefully it doesn't undercut that base. Microsoft traded below its 50, took forever to rally up above it, and now is getting pushed back down. So that does not look good as well. NVIDIA, they had a stellar report and then sold off, so that's not a good sign because stocks peak when the fundamentals look the best, and this thing is now, 80 points off its high. So anyway, well below the 50 here. Yeah, 7.1% below the 50, huh? Wow. Anyway, that one has fallen quick. And the ugly, of course, is Netflix. I'm sorry, I'm picking on Netflix here, but that is just one ugly chart. Anyway, I'm gonna take you down the negative road, of course, and then come back on the positive track. And I've got to go to retail once again. Retail's just getting beat up. The consumer, even Powell said it today, they expect the consumer to be slow. There's Deckers. The consumer's going to slow down the second half of this year. They're expecting it the beginning of next year. Here's Dick's, sold off, sliced everything, and then hasn't been able to do anything since. Foot Locker, same way, sliced the moving averages, just nothing. I could pick on some other stocks too, but I'm just picking on these retail stocks because I feel like it right now. The other one is CROX. I actually think CROX is kind of undervalued here, $87. But can't even rally past its 10 EMA. That green line's acting as resistance now. So complete weakness. And I like owning strength. So I'm not interested in CROX. Anyway, there are some of these retail stocks that are doing well. Here's Murphy defying the odds today, up 1.13%. So Murphy continues to do well. CASY had an inside day today, but is up 0.63%, and not bad. And LULU kind of surprised me a little bit today. It bounced off its 50. Nice sharp bounce here. You see the 50 there. Yesterday was 382, and today it's nearly 392. So nearly a $10 bounce. So about 3% for LULU. Anyway, it's pretty sad when I want to go to the leading stocks. I have to go to the insurance stocks, which tells you, all I need to know about this market. This is Gallagher, made a new high and pulled back today, but this thing's showing, incredible strength. Goosehead, another stock that made a new high today, broke out of a base, with volume. Insurance companies, got it, right. Okay. Ryan, I'm really not interested in these stocks, but I just am pointing out their strength, that's all. Ryan, flat on the session. And bro, my favorite ticker symbol, bro, flat in this session, which is good. When the Nasdaq's down 1.53%, flat is good. So that's winning. The coal stocks, once again, strong. This is AMR, sold off a little bit today, but it made a new high at 251 yesterday. This thing's had a heck of a move. CEIX is another one in the energy coal space. Pull back today, and these ones have inverted hammer candles as well. What was the Tidewater? I'm going to mix the energy, coal and oil. Tidewater pulled back to the 21, had an inside day. This thing's showing strength. That's a good move on a day like today. And XPRO, this is one that's on our ready list. This one, it's being supported by the 21. It's just taking forever in a day. So this one really requires patience. Just an inside week so far this week, down 4.75%. So not a great week for XPRO. A couple stocks on our ready list that we're doing well is Akamai is one. And this consolidation, I talked about how the length of the consolidation here, it's been real short in duration. Akamai had this 6-week flat base and traded a new 52-week high today. So that one looks good. CYBR, I never bought CYBR, but any stock making a new high in a tape like this with this volume, you got to point it out. That's showing strength, I believe. This one did not sell off like a lot of those software stocks. Still, it had a correction. Long consolidation now today, and this week's breaking out of that base. So CyberArk looks good. And then WDC, Western Digital, computer data storage system, tried to break out, but you could see the market weakness pulled it back and it closed at 11% of its daily range. Not what you want to see on a move like that, but I mean, general market weakness is dragging it down. I wanted to point out today there was a CELH and L from the growth stocks. They are like time bombs and they're going to go off eventually. I'm not saying this one's done. I'm not saying that at all. I'm just saying that ELF and Celsius are strong stocks that have been up for a long period of time, and they don't go up forever. They sell off. I told you about ELF yesterday in the breaking the channel line here, the lower part of the channel, and it breached it and followed through. So it's quite different because ELF hadn't formed a base since last summer. Okay, and then had this massive run, and then finally broke the channel line. Okay, which is fine. Stocks do that. To me, that means it's either going to form a base or just return back and fill a bunch of gaps here. It has a gap at I believe about $86. Yeah, 86.71 is that next gap for ELF. So if it pulls back to 86 and fills that gap, then makes a little base, I might get interested. But right now it's just a falling knife. It's been down, I think, 12 out of the last 13 sessions. Anyway, doesn't matter. It's an avoid for now. But I wanted to point out the difference with Celsius because it did not breach its channel line. In fact, this one had a base on base pattern and broke out and then went sideways like in a flat base pattern here. So this one didn't really break out until August, and I want to get the exact date here. August 9th. Okay, so this one has been running for about 6 weeks, which is far different than ELF, which didn't base, since last July, July of 2022. Okay, so it's been about 14 months since ELF based, and it's only been 6 weeks since Celsius based. Clear difference. This is a character change for Celsius. I'm not saying that Celsius can't sell off and undercut the 50. You could do that tomorrow and even trade down to the 200. I'm not saying that at all. I'm just saying it's a different animal than ELF because of its duration of consolidation here and the recency of the breakout in comparison with ELF, which had not base since July. Okay, I hope you see the difference there. This is a long run, and stocks don't go up to the sky forever. I do want to point out that it hit 137, then 135, then 139, 138. So each week it was bumping up against that 137, 139 level, finally broke down, and it just broke its lower channel line. So to me, that's far different from Celsius, which had this base on base pattern, just recently broke out, formed another flat base, and then August 9th, that's a recent breakout. So you can see it's only been like 6 weeks, but certainly something to watch. I mean, it all depends on your time frame too. I mean, if you owned ELF and Celsius, for 4 years or whatever, I mean, you're at 5,000%, so big deal. It comes down 7 or 8% in a day. What's ELF is up nearly 500% in that time. So it's all about your time frame. If you bought it back here, I mean, you don't even care, right? If it goes down 10 or 20%. But if you bought Celsius after this breakout here, then you're going to have to sell it pretty soon, or you're going to have a profit turn into a loss, and that's a cardinal sin. You can't do that. So you have very little margin for error there. Anyway, just wanted to point that out. There's a lot of people getting excited. I don't get excited. I just kind of trade technically, and if it tells me to sell like a ELF, then that's what you do. And if it tells you to buy and forces you in, then that's what you do. So just pointing out the difference in those two growth stocks. And like I say, all growth stocks have a shelf life, and ELF has fallen off its shelf, and Celsius to me is still on its shelf. I don't know what the shelf life is, but we take it one day at a time. And today it sliced at 20. Yes, it had this inverted hammer candle. That is quite an ugly candle. I don't think we've seen anything quite like that. It had a bad one here back to the 10 on August 17th, but nothing like that I could find in a long, long time. Anyway, that's it for me today. Thanks for watching. Actually, I lied. I got in honor of Steve Jobs. I have a couple things I want to talk about today. One is chart that I already showed you. That's Decker's. When I look for stocks to short, if you're looking to short, I look for weakness. Just like when I look for stocks to buy long, I look for strength. And Decker's sliced its 50 here, and then took forever, not forever, it took several weeks, probably 3 weeks, like 15 sessions, to rally back up to its moving average, and then got pushed back down again. So this is showing complete weakness. And every time it comes back up to this 50 and can't push through it, then to me that's a short play. Palantir is another one that sliced its 50, lots of distribution here. You can see the big selling bars here in Palantir here. People want out of this thing. Remember, this thing has a ton of shares, so it takes a lot to move this stock. But it sliced its 50, and this one took a long time to trade back up to its 50. And then what happened? It got pushed back down, and it looks like it might want to go lower. Of course, in this tape, most stocks are going lower. But anyway, I just wanted to point that out. That's what I look for. I could show you a lot of other stocks that look like this. It's slice their 50, take forever to trade back up, and then get slammed back down again. Anyway, I want to end on a positive note. FDX, after hours, they reported sales below estimate, and their forward guidance sales were below estimates, but they beat on earnings, and their forward earnings guidance is above estimates. And how do they do that? Well, by cost cutting, right? They're just managing their business, probably headcount, and laying off employees. And so they're not making as much in revenue, but they're making more in earnings due to cost cutting. I'm not sure that's a great sustainable model, but it's going to work. It looks like for tomorrow, it's up almost 6% after hours. KB Homes also reported earnings after hours. They crushed it, and it's down after hours. So I'm just going to have to, research that one a little more. But they had real strong blowout numbers, not even close on the revenues and EPS. So I don't know. I'm going to have to look into a KB, but that was certainly a strong report. And the last thing before I go is NVO split today. And in this tape, this week, September, August tape, this thing is just showing a flat base here, showing strength up 1.29%. You want to know, why do they split their stock? Why would a company do that? And I believe for this stock, it's for liquidity. Mostly, and one, liquidity, two, for affordability, is because people would rather pay maybe $100 and $200 for their stock. And the other last thing I'd say is that it's also a sign of their management's confidence in their business going forward, is that they think they're going to continue to beat earnings estimates and raise guidance, and their products are in strong demand. So it's also a sign of confidence. Anyway, that's it for me today. If you're getting frustrated in this tape, that's kind of normal. This thing's going to test your patience, going to test your discipline. For me, I look at the thing in the morning for an hour or so, then I go golf, and I come back in the afternoon and, see what the damage is, or, just to observe the what happened in the market. And it's just, to me, it's September is a good month to have a hobby. And I believe this will probably last for another week maybe or so. And once we get into Q4 and earnings in October, I believe we're going to strengthen, and the earnings are going to be strong. Anyway, that's my story, and I'm sticking to it. At MC Stock Charts, we never give up.